Joining us now to really understand this is Ira Jersey of Bloomberg Intelligence. Ira, is this a technical move that you feel in yields climbing to the highest levels going back to 2007?
Well, it's certainly partly technical, partly on the idea that supply is going to continue to be a strain. But the single biggest thing is the global central bank environment, in my view. Number one is you think about what we were pricing for the yields to be in 2025 and where the policy rate was going to be in 2025. It was 2.5%. It's now 4%. So we had to reprice 5-year notes, 10-year notes, and even the long bond to reflect that less easy monetary policy going forward, number one. And number two, it's the global aspect of this. One of the reasons we've sold off overnight in the U.S. was the headlines that Japan may again ease its yield curve control targets. So that means that, yields in Japan wind up selling off, followed by Europe, and the U.S. just has to follow because it is one of the more liquid government bond markets in the world.
Do you start to see buyers come in at this point, Ira? We had a number of guests earlier this morning who seemed to suddenly like treasuries a whole lot more here, including BlackRock.
Well, I think treasuries and certain parts of the treasury curve offer an interesting dynamic because if you go out and buy a 5-year note right now, it means that it's hard to lose money in a 5-year note unless you think yields are going to go up another 300 or 350 basis points, which means, going back to like early 1980 type of levels for those yields. So I think the risk reward is getting more and more skewed toward being long. I think the problem is convincing people in a bear market, do I try to catch the falling knife? Do I try to catch the bottom? A lot of people had been long thinking, when the Federal Reserve and other central banks stop their hiking cycles, it's time to buy duration and get long. And they've been burned now by at least 4 or 5 points in terms of the 10-year bond price going down. So I think it'll take a little bit more time. And 5% is not really an important technical level. 5.3% is pretty important here because that was a yield high from 2006-07 time period. So we could sell off a little bit more before we start to see a little bit of capitulation.
Ira Jersey, thank you so much.